Hi, this is Zach Mead with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 4th of August. Starting off with the FTSE 100, which is trading just around the 50-day moving average level. That's the blue line there. It'd be nice to see a weekly close above 75.40, which would give us hope for the new week. Above that, looking for basically another test of the February resistance line there. It's currently at 77.04 by way of the 200-day line at 7600. Good to see that also the market bounced basically where we would hope it would bounce, which was the 74.50 breakout level of that June resistance line. So the charting in that case worked okay, even though obviously we were hoping this market would just go directly through that February resistance line. Moving on to the DAX, which has had a few rather scary gaps this week, a couple of gaps down midweek. We've bounced so far off the floor of that rising trend channel from this time last year. That's around 15,700. Above that, looking for this market to then retest the highs 16,300 up to 16,500 that we managed to reach at the end of last month. But still can't rule out a test either of the July floor there, 15,400, or even a worst case scenario target of 15,200 in the 200-day moving average. But so far managed to have avoided the worst at the DAX. On to the Dow, which has been still managing to hold above 35,000, which I think is a win, even though that's a little bit below our old March resistance line projection target, 35,200. Below 35,200 is the risk of a move to 34,500, but that should be the worst. We see the RSI still above neutral 50, so that gives this latest pullback a relatively benign look. And as to be said, credit rating upgrades and downgrades tend to be rather irrelevant, even though the market still takes them surprisingly seriously. On to the Bitcoin, which has had a bit of a struggle over the last few weeks, but it's trying to snap out of it. We've just basically been dithering since the end of June. Want to see this market above 30,000 and above the 50-day moving average, still rising sharply there at around 29,800. So end of day close back above the 50-day line, or 30,000, whichever you prefer, would be the trigger for hopefully a retest of last month's resistance through 32,000, but still a surprisingly flat look there to Bitcoin. On to the stocks, and starting off with a requested stock from a very keen Twitterati type person. Here we've got Arc Minerals, which I wouldn't have ordinarily looked at, but if looking at it now, you can see that there is a bullish divergence there. So we had a lower low there in the middle of July, but RSI pushing higher, so a bullish divergence, and also that bear trap putting us on alert for a break of that April resistance line around 2.7 pence. Above that, we're probably looking at this market heading up towards the 200-day moving average area at 3.4 pence, maybe by the end of this month. Ideally, we stay above the 2.5, 2.6 pence level ahead of a potential move higher. Obviously, the big resistance initially is actually the old support from September through back in June. So we really want to get above that, and that might be the sort of the signal that cautious traders are looking for. Moving on to Aura, which is also showing signs of a turnaround. Here we've got that favorite sideways shuffle above a rising 50-day moving average. Tends to be a very good signal, and we've actually gapped up today. This was preceded by a bullish divergence line, so lower lows for end of May, beginning of June, but the RSI higher. So we've got two strong triggers there, and we would expect that with a decent close today above 10.25 pence, we should head up towards the top of that broadening triangle from April as high as 16 pence. And that could happen as soon as the end of next month. But that sideways shuffle above the rising 50-day line near the lows looking good for that stock. On to BSF, and here, still surprising, the shares are not quite as active as they were back in the autumn, but we are gingerly breaking that line of resistance there from March, and we've broken, or trying to break, the 50-day moving average at 12.25. Want to see probably a clearance of the 14 pence level, really, to get it out, get the shares out of the 2-month consolidation they've been in, even though the bear trap from below July support to start August has actually, or does actually deliver a decent bullish signal. Obviously, don't want to see the shares back below 10 pence at any time in the near future. Moving on to the stock which went into this week with the best charting setup around, which is quite a statement. Canadian overseas bear trap gap reversal, beautiful unfilled gap to the upside there on the 24th of July, and we haven't really looked back since. Confirmation of the turnaround was the break of the high of that day on the 24th at around 2.2 pence, and then good solid support there at 2.5 pence, which I think I discussed yesterday. Initial target was at 3.3 pence. The next target was at just under 4.5 pence, say 4.4 pence, which we've managed to deliver today, right on the line on that one. And an end of day close above 4.4 pence would then give us a fresh target there up to 5.6 pence. So just charting working absolutely spot on that, and doing it relatively quickly against the stock, which possibly a lot of people in the market would not be feeling like going bullish on. But let's see if we can hold above 2.5 at least over the near term, ahead of our push to 5.5 by the end of this month. Moving on to another recovery situation, which seems to have enjoyed, I think it was a recent deal with Air New Zealand, which obviously could be a company maker. Here we've got East Imperial, and we hit our first target there, the top of that triangle from May, around 1.25 pence, above 1.25. We're looking for not only the 200-day moving average at 1.9, but then maybe as soon as the end of this month up to 2.4 pence at that February resistance line projection. But the key here is remaining above 1.25 for East Imperial. Stock which has been fantastic over the recent past, but I don't think anybody's mentioned it at all, which is normally a good sign actually, is Great Southern Copper. Unfilled gap to the upside, bear trap gap reversal to start the rally. So note the comparison with Koppel, and also that extended bullish divergence line. Gap closed buy signal yesterday, so we gapped down, but we filled that gap on the close yesterday. So above 2.2, looking for 3.5 at Great Southern by the end of this month. Another stock which is perhaps not looked at very much, Intelligent Ultrasound, and I'm not sure anybody actually knows what they do, but we had bear trap gap reversal back in April, same formation as we've seen on two stocks at least here today, and then another unfilled gap to the upside today. The old target, or initial target, was 12 pence, above 12 pence. We're looking for a target as high as, if I can get it on the chart, as high as 20 pence, which is a 2022 resistance line projection. So looking pretty good on Intelligent Ultrasound after that bear trap we had back in April. Moving along to a stock which had a decent announcement today, Ilika, and that's caused the shares to gap up with the bear trap that we had, following on from the bear trap we had back in July. The gap high suggests that above the 200-day moving average at 43 pence, we're looking for 55 pence initially over the next couple of weeks, hopefully, and then maybe by the end of next month, as high as 72 pence, which is the top of that broadening triangle from October. So a nice turnaround situation there at Intelligent. One of the better rises of the summer to date has been Optibiotix, and we can't get enough of a good thing. Shares gapping up today. We suspected earlier in the week that 25 would be the base, and then the target was up to as high as 53 or 54 pence, which is that March 2022 resistance line projection, and looking for the low 50s while we're above the 33 or 34 pence level, according to Taste. Just hopefully a day now away from a golden cross buy signal there on these shares. Moving along to stock which I haven't looked at for ages, but it looks like it's finally getting its act together in terms of the technicals. Here we've got what I call a U-shaped bull flag breakout for Roquefort, and that's accompanied by the break of that resistance line from back in January at around 7.5 pence, above 7.5. We're looking for as high as 12 pence by the end of next month, especially while we remain above the 200-day line at 7 pence. So good to see that back in play. On to Sirocco, which is also looking as though it's trying to be back in play. Here we've got a situation where we had the top of the price channel there from back in July last year up to around 0.55, above 0.55 if we managed to do that. Shares could be up to 0.8 by the end of next month. The reason for the relative enthusiasm is that sideways shuffle above the rising 50-day line, and also the way the 200-day moving average is also rising. So looking good on any breakout through 0.55 for Scirocco. On to the other big stock of the recent past, which is Upland Resources, and shares behaving reasonably well, apart from that dip that we had after the 1.5 pence zone was reached. The view now above 1.4 pence, we should be looking for the ultimate target here as high as 2.6 pence, and we're lucky we might see that by the end of this month, given the way that this stock seems to be a stock in a hurry, and obviously we had the rally started by an unfilled gap to the upside, which tends to be what you see in the most strong of situations. Finishing off with Valerix, and here it's the first signs of a turnaround. We have bullish divergence there, so the lower lows for July and August, but higher RSI trace, so the trigger here would be an end of day close through 6.25, and maybe then that would get us back up to looking at the floor of that gap back in June, around 8.5 or 8.75 pence. But early days yet, we really want to see that line broken there from June. That's it for me today. More updates over the weekend.